Hello, everyone, and welcome to the Financial Prophet. I am really glad to see you here. Today, we have a special topic. We will discuss the year ahead, going into 2026, what we can expect, and how I am positioning my all-weather portfolio to achieve another excellent return as we advance. Now, the last time I took part in Seeking Alpha's Analyst Outlook series, it was about 2024. I can't believe how fast time flies. Now, 2 years later, as we enter 2026, this could be another remarkably transformative year for investors. Now, I expressed my increasing bullishness in AI-related stocks, gold and silver companies, material names, Bitcoin, and other segments before 2024 even started. And those investments paid off very, very well. My all-weather portfolio, or AWP as I call it, appreciated by nearly 70% last year in 2024, and is up by roughly 80% year-to-date as of late 2025. Now, I want to talk about why the bull market is likely going to continue. Now, previously, I argued that we were coming out of a brutal bear market that ended around the end of 2022, and we were still in the very early stages of a new bull market cycle. Moreover, this new bull market had significant constructive catalysts, including future Fed easing, government stimulus, economic growth, and of course, AI. Now, some of my top portfolio holdings going into 2024 included NVIDIA, Meta Platforms, AMD, Tesla, Palantir, and other high-quality, market-leading companies. Now, since 2024 began, holdings and others have done extraordinarily well. For instance, despite the recent tech volatility period and many considerable corrections in the AI market and other sectors, Meta is still up by over 80% since 2024. AMD is up by about 65%. Tesla has appreciated by nearly or roughly 90%. NVIDIA has surged by about 275% in the same time frame, and Palantir has skyrocketed by over 1,000% since 2024 started. And in full disclosure, I had Palantir designated as my number one stock pick for 2023 and had accumulated such a considerable position going into 24 that it made it my most significant position by far in 2024, around 15 to 20% of total portfolio holdings. Now, with roughly a 340% gain in 2024, Palantir turned out to be the best performing stock in the S&P 500 that year. So, what does the Financial Prophet's crystal ball say for 2026? Well, when 2025 started, I predicted that the market would have another solid year due to continued AI innovation, easing monetary environment, a resilient economy, and other constructive factors. In fact, my 2025 S&P 500 year-end target was 7,000. And this was around the end of 2024 where I came out with the 7,000 target. Well, now that we are trading around my target level, I anticipate another solid year in 2026. Now, the constructive narrative, it should persist in my view. We have a Fed that continues to lower interest rates. It has essentially resumed quantitative easing now, which is extremely bullish for risk assets, especially in the intermediate and longer term. Therefore, the monetary side of the economic equation is setting up to be very bullish in 2026 and could become even more so once a more dovish White House-friendly Fed chair like Kevin Hassett is selected in May. Now I want to talk about the economy and how it could actually continue strengthening instead of weakening in 2026. Now, despite some recent volatility, the economy remains highly resilient, and we could have a growth surprise to the upside next year, I believe. Lower interest rates can enable consumers to refinance debt at much lower levels, which could unlock more spending power as we move into 2026. Furthermore, potentially lower mortgage rates could lead to a recovery in housing and possibly reinvigorate the mortgage-related lending market, which I believe may be the missing link here in order to propel growth much higher in 2026. And again, this dynamic could become a significant driver of GDP growth as we advance into 2026 and potentially longer term. And the way that the Fed will get, mortgage rates lower is, first of all, lowering interest rates may not do the trick, so to say. So the Fed has already started doing quantitative easing, but it's primarily buying shorter term treasuries now. However, once the Fed moves over to longer term treasuries, 10-year, 30-year treasuries, etc., that's when it will really be able to hammer down the longer end of the yield curve and get those mortgage rates down to potentially 3-4% or possibly even lower than that. So next, let's talk about how corporate earnings could also increase much more than expected. Now, higher productivity coupled with increased growth driven by improved economic activity could drive corporate profits above expectations. Thus, corporate America's earnings could increase considerably more than expected next year, and many companies could beat their depressed and often lowballed or sandbagged estimates. Businesses should also benefit significantly from the more accessible monetary policy. We can look forward to more investment, M&A, IPOs, and increased business activity overall. Additionally, don't forget about AI. If you think we're seeing a lot of investments in AI now, just wait until we arrive at considerably lower interest rates with increasing QE. There could be a lot more circular financing and financing in general surrounding AI. Therefore, this AI bubble may not be as close to popping as some people may perceive just because we're having another AI growth scare at the moment. In fact, AI could continue to dominate growth. While some pockets of the AI market may face challenges and there could be shifts in the broader AI segment, AI should remain one of the significant growth engines in 2026. Therefore, many high-quality AI-related companies trading at discounts after the recent substantial corrections could represent very solid buying opportunities here and on future pullbacks as well. Also, it's not only about AI. Of course, many segments such as defense, aerospace, energy, biotech and pharma, EVTOLs, nuclear, lithium, gold and silver, materials, and others can do very well next year. In fact, I have a list of my top 15 highly risk-reward stocks to consider owning for next year. And here's my list. I have Tesla as a primary candidate because of its amazing potential in FSD, in the general electric vehicle segment, in energy generation and storage, robotics, AI, and other segments. Tesla is a monster that could keep growing and could potentially become the most valuable company within the next 5 to 10 years. Next, AMD has an excellent chip business in the server market as well as in the very prevalent in the consumer segment. So AMD trades at a very, very low PEG ratio. It has a lot of growth potential, a lot of earnings per share, a growth potential ahead. So AMD is a very, very solid company going forward. Dell, undervalued, underappreciated, but it has a very vibrant and excellent AI data center storage business, which is basically its shining star. So I like Dell here a lot. It's extremely cheap on a PE basis, very cheap on a price to earnings growth ratio. Next, Navius, which offers various services to the AI industry. It is a market leader. It is a very unique company in the way that it's structured, in the way that its business is set up to cater to the burgeoning AI industries. I have a lot of faith in Navius, and I think that this recent pullback to about 80 $75, wherever the stock bottoms. I think this is really a good intermediate and long-term buying opportunity. Next, SentinelOne. This is a cybersecurity company with a lot of AI potential and a lot of potential to gain market share. I believe it's also a potential takeover target. Its stock has been hammered recently, so it's really, really cheap. Excellent candidate in my view. Mobileye, a bit of more of a speculative play, but it has a very interesting business in the FSD segment, so I believe that it does have a lot of sales growth ahead, especially going into 2026 and in 2027. I really think that this stock could begin to shine in the next few years. Next is IREN, which is an interesting play also on the AI segment and also catering to the growing data center services industry. So I believe that this company can definitely continue playing a more significant role. Then I have MicroStrategy, or Strategy as it's called, MSTR. And the reason I have MSTR on here is because I am bullish on Bitcoin. I think that Bitcoin is at around an attractive buying level around 80,000 here. And I think that MicroStrategy trading below net asset value is actually a good leverage play on Bitcoin here, given that Bitcoin appreciates and doesn't continue to deflate from here. Otherwise, you don't want to be anywhere near MicroStrategy. Next is Circle, which is a company that essentially serves as a bridge between the traditional financial industry and the digital asset financial industry. So it's definitely an interesting company. It owns one of the stable coins, USDC, which I believe is the second most prevalent stable coin with a pretty massive market cap. So I do think that Circle has a bright future going forward as the gap between the traditional finance industry and the digital asset cryptocurrency industry continues to narrow in the future. Next one may be a little bit surprising for people. It's Snap, but Snapchat has about 500 million daily active users. It has a market cap of only about 12 billion. It's extremely undervalued relative to its price to sales ratio of only about 2. So I really do believe that this company can do much better. Its management can do better. Its stock price can do better. And the downside is probably limited here. So I see a good risk-reward ratio here. Next is Meta Platforms. It's had a big pullback, big correction. I still think it has a very bright future ahead in social networking, in AI, and it is a monopoly after all, almost a monopoly. So it does have a lot of potential ahead with the metaverse and incorporating AI into everything. So it could do really well. Next, I have Oracle, and Oracle has gotten just completely obliterated, down by about 50% from its high. So around 350, it was too expensive. Now as it approaches the 180, 170 range, it looks extremely cheap. So I do want to own Oracle here despite some of these perceived debt issues and other elements. I still believe that Oracle at these levels is probably a good buy. Next is Rocket Lab. Now, I have a lot of, interest, a lot of faith in these space-related companies. I think it's a very unique segment, and Rocket Lab, along with SpaceX, are basically the leading companies in the space. So I think that Rocket Lab has a lot of potential ahead and could do really well. And it's not necessarily a direct competitor to SpaceX in the sense that SpaceX is going to put Rocket Lab out of business. I believe that they could coexist, and potentially even SpaceX may acquire Rocket Lab down the line if it wants to. Next is this company called Red Cat. This is a drone maker. This is a bit more of a speculative stock, but this company does have some very innovative drone technology. Drone technology is in high demand. It has contracts with the U.S. government, so I believe that this stock could really do well in 2026 and beyond. And the last stock on my list here is this little known company called Angel Studios. Now, this company is a streaming company that's gone from about 300 subscribers to about 1.6 million subscribers in a little bit over a year. The growth is outstanding. It's phenomenal. This company offers, what differentiates it is that it offers primarily family-friendly content on its platform, which I believe there is a big market for this type of content. And I think that this streaming platform can really grow nicely, especially considering that its market cap is only around 700 million or so now. I believe that it has a really bright future ahead and a potential multi-bagger here. Okay, so let's get down to the bottom line. The bottom line is that 2026 could be another very solid year. The fundamental backdrop, including the Fed, monetary policy, easier monetary policy, the potential for more fiscal stimulus and other factors, it all appears very positive. The consumer and the corporate sectors could also strengthen as the easier monetary environment persists and possibly even accelerates going forward. AI and other sectors could continue powering growth and productivity. Therefore, earnings, valuations, and stock multiples could continue to expand in this moderate growth, higher than expected growth environments. We could also have a highly accommodative monetary environment simultaneously, which puts high-quality stocks and other risk assets in the Goldilocks zone. Now, given this bullish intermediate and longer-term market dynamic, I predict that the S&P 500 could reach around 7,500 by mid-2026 next summer, and potentially reach around 8,000 by late 2026 or around year-end of 2026. And for now, I am setting my all-weather portfolios 2026 full-year target return rate range at 30 to 40%. Thank you very much for watching my profit report. I genuinely hope you enjoyed it, and more importantly, that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comments section below. If you enjoyed my video, please click like, share, and subscribe to my channel so I can continue creating these highly informative and potentially very profitable videos for you guys. You can also join the Financial Profit, my exclusive investment community, which is Seeking Alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community now. Thank you very much for watching. See you next time, and have an amazing day.